Welcome back. You're still tuned into NatBank Business Watch. Thank you for staying with us. It's 9 minutes before 3 o'clock. We take a look at today's markets with Bongani Mabuza from NatBank. Bongani, very good afternoon. Welcome to the program. Still trending, Iran and Israel. If I may ask, the ceasefire brokered by President Donald Trump between Iran and Israel, is it still holding?
Good afternoon, Lulu. Good afternoon to our viewers. It's a pleasure to be here again on this last Wednesday of the month. As you rightfully say, what's really moving markets is still the Iran-Israel conflict, and there's a ceasefire that was announced. At some point yesterday, it seemed to be very fragile and on the brink of breaking, but as things stand right now, it seems to be holding. And that is really, as we go into the numbers, you'll see that's what's moving markets. That expectation that we might see the end of this conflict, at least for now. And so there's generally a risk-on sentiment back in markets.
Yeah. So what's the reaction from investors and also NATO leaders on this conflict?
Yeah. So let's get right into the numbers. If you look at, for instance, from a currencies perspective, there's generally a risk-on sentiment with the Langeni back on. In terms of appetite, so investors are back piling on appetite and exposure to emerging markets or risk.
Unfortunately, we still can't show our viewers the figures as yet. We're experiencing a technical glitch, but yeah, we'll get into the numbers shortly. But you can go on. Yeah.
Yeah. So from all the asset classes, from an equities perspective, from a currencies perspective, from a commodities perspective, you see that the movements are signaling that there's a risk-on sentiment. From a currencies perspective, you see that investors are piling on to emerging market or risky assets with the Langeni strengthening against major currencies. From an equities perspective, you saw equities gain strength. I mean, the Nasdaq 100 reached a record high on the back of this news, and the S&P 500 was also up about 1.1% on the back of this news. And this is signaling that investors are putting on risk again. Investors are putting on are putting their money to assets where they expect to get a return. And from a commodities perspective, you see the prices in terms of commodities start to taper or to come down a bit. This is seen in the price of gold, which has come down from where it was about a week ago, and this is also seen in the price of oil. I mean, oil, last week we were talking about oil being up above $80 a barrel. Right now, oil is down about just shy of 11% week on week. So oil saw a 2-day streak, which was downward, which was the most that's been seen since about 2022.
Okay, they're now visible, yeah.
That's
figures are visible.
Yeah,
okay.
100%. So we see oil being down about 1%. This is just a 1-day move, but the move from a week to date perspective is down about 11%, and this is really signaling that markets are expecting the ceasefire to hold. Markets are expecting a sort of a return to normalcy, if you'd call it that, as a result of this ceasefire. Okay. So it's really positive for markets, and I think on the back of that, I think what that means is that there were now inflation fears, especially if the price of oil went up. As we saw, it went up by more than 10%. There are now a lot of inflation fears, and what that means for you and I as we go into the pump to fuel cars or as we're boarding public transport and so on. And so with the price of oil being down about 11%, I think some of those fears are a little bit abated, which is good. And also on the back of that, also we're seeing that translate into other expectations, especially inflation expectations, which then drive interest rate expectations.
All right. As you were explaining that the S&P 500 is on the green zone today, let's quickly take a look at how it's performing today.
Yeah, 100%. The S&P 500 is, as we said, is up about 1.1%. The FTSE 100 is almost flat, with the JSE being down moderately. But we need to put these numbers into context, right? So the S&P 500, we did say that that's because of the risk-on sentiment that's back with investors looking for where they can deploy their cash. As we saw, whenever there's periods of uncertainty, investors rush to safety. They rush to buy gold. They rush to buy the dollar. We saw a little bit of a reverse on that with the hike in the S&P 500 really being led by technology stocks, and we saw other equities names go up. From a JSE perspective, we're slightly down, but this is, if you put that into context from where we were last week, again, there's a risk-on sentiment. The JSE OSHA index is up week on week, so that's a real positive.
Okay, so before you conclude, let's quickly take a look at currencies today. The lilangeni is trading at 17 malangeni against the US dollar today. Not looking good.
Yeah, I think that it depends on which side of the trade you're on. But from an importer's perspective, that is a positive. Okay. We did see the lilangeni go up at the height of the conflict to over 18 against the dollar. So we are now down about 25 cents if you look at it that way, which is positive. It means that if you're importing, it's now cheaper to buy goods. Okay. But if you're exporting, again, this means that you get less than you would at, say, about the same time last week. This is the same is true against the euro. The pound against the pound, we're relatively flat. But I think what is also happening is that there's two things. One, interest rate expectations, as I mentioned a bit earlier. The chairman of the Federal Reserve, Mr. Jerome Powell, is in the second day of testifying in the U.S. Congress today. And there's expectations around interest rate cuts. Yesterday he maintained that we expect interest rates to be higher for longer, but markets at the moment don't seem to be buying that story and are pricing in a July interest rate cut, which is then built into the expectation for South Africa. Markets are expecting an interest rate cut of 25 basis points in July in South Africa, and markets are sort of expecting an interest rate cut of 25 basis points in Eswatini in July. But we'll see. We are about a month away from that decision. We'll see what happens in the next couple of weeks to see how things develop.
All right. Thank you, Bongani, for that analysis. Well, there you have it. This was the final segment, Market Analysis with Bongani Mabuza. Unfortunately, we've come to the end of our program today. You were watching Nedbank Business Watch. Do join us again next week, Wednesday at exactly 2 p.m. Enjoy the rest of your day.
Make better money choices.